Welcome to the market update on Wednesday, January 31st, 2018. And here's the thing. The first thing we're going to take a look at today is going to be the Dow Jones. We had a couple bad days. Normally I don't look into the futures markets too much, but the futures markets is up this morning. We're going to start charts right here. Pre-market trading, the Dow up plus 215, level 26,270. We're going to take a look at the Dow right here. Okay, and what we're looking at is the close January 30th was minus 362, and it's down 1.37%. 26,076. Now here's the thing. I checked bonds this morning. If we take a look at the bond rate here, we see that bonds have backed off down to 270 on the US 10-year. 2.70. That's 2.70, not 270. 2.70. Anyway, the bonds have backed off a little bit. They were 2.72. Now here's the thing. What this has done is this has made the market, for a little while at least, in my estimation, Teflon. It's made it resilient, resistant to the bond prices marching upwards. This resistance won't last. It's only a temporary thing, but it should get the stock market up. I'm thinking. Now this is just my opinion. But I'm thinking that the stock market should be, it's just like an immunization. It's like when somebody goes to the doctor and they get an immunization against the flu. This is what this is like for the stock market, though. Until the stock market gets up around, I'm expecting it to get up around 3% in the US 10-year before it starts to react again to this rising bond yields. In the US 10-year is the one to watch. My prediction is 3% on the US 10-year. Then the market's going to start to react again. And I'm expecting a little bit, maybe them to come out. And this is sort of what I'm expecting, is them to come out and buy blue chips. Buy blue chips, blue chip equities, blue chip stocks when the market goes over 3%. But at any rate, the rest of the market's going to become very, very unstable at that point. So we're going to have to watch this very, very carefully, what's going to happen when this US 10-year, this is the one we got to focus on right here. We got to be myopic. We got to focus on this US 10-year right here. We got to be myopically focused on this. This is what we need to do, because this is the problem area, right? The US 10-year. So anyway, let's move on and let's take a look at cryptocurrencies. There's really not much to see here right now at this stage in time in cryptocurrencies. Now, what we're looking at right now, we're looking at Bitstamp at 10,050, and it hasn't been doing much. Okay, let's focus out on the chart. Let's go to the, say, 30-minute. We can get a good look at here. No, let's go a little bit farther. Let's go to 2-hour. And what we see was, we saw the peak at 19,666. We see it descending downwards to $10,000 roughly. That's what it is right now, 10,043. And we've seen a low of $9,200. And basically what we see is I wouldn't really call this a crash. I'd call this a price correction. Any other market, if it went down by half, you'd say it's a crash. But not in Bitcoin. In Bitcoin, this is more or less just a price correction and because Bitcoin is such a volatile market, see? A price correction and a consolidation. But will it go down or will it go up? I'm giving it a 60% and a 40% chance of down and a 60% chance of up. But down would be devastating to this market, because if it goes down below 8,000, I think panic will enter into the market, and then we could see a drop, slide all the way down to 6,000 if that were to happen. The reverse side of that is up, and up is probably going to break new highs. up above 20,000 if it goes to the upside. And so I give it a little bit better odds of up than down, but still fairly high odds of it going down. I'm giving it a 40% chance of going down, and that could be devastating to the market if it does go down. So let's take a look at the cryptocurrency market capitalizations here. Let's narrow in the chart. What we see is most of the coins are in the red numbers. Stellar is in the green. Lisk, L-I-S-K, is in the green too. The coins that are the most in the red right now are probably your best bargains. Let me see, what's Litecoin doing? I always like to follow Litecoin. Down 5.73. $163. I'd say Litecoin's a pretty good little bargain right now if the coin market decides to go up. If it decides to go down, maybe it's not such a bargain. It's a very tentative market at this point, the cryptocurrency market. So now let's take a look at the US dollar index, 88.96. So nothing much to see here. The dollar's still under 90, 88.96. Let's take a look at oil prices. Sweet light crude oil. What we're looking at right here is $64.25. Actually, it's $64.31 right now. So it looks like it's trending upwards right now. But I said this before, I can't see it going too much above $70 for sweet light oil, the sweet light crude. I can't see it going too much above $70 because if it does, if it starts to get up around 74, 75, oil producers are going to increase supply, and the world has a very steady set of supply of oil that it uses every day or consumes every day. If you increase the supply beyond that, you get too much oil and you get buildup of inventories. If you go too much below that, you get a depletion of inventories. And what happens is, in either of those scenarios, it makes the price of oil either rise or fall. Silver price today, we're looking at $17.20. Of course, I don't really do the gold price, and the reason why is because if you see silver price rise or fall, you're seeing the reflection of the gold price as well. I could go gold charts here. We'll go gold charts just for the heck of it. $1,343 right now. Gold is in a narrow trading range right now, and it's right in that range. It's following. It's for the last 3 days. You can see what a narrow range it's in here. Just probably what would be 1342, let's say, is the median range here, right along in here. So that's what it's been following for the last 3 days. So that is what we got going on in our markets today. What we got to watch for right now is you got to watch that bond rate. And I think that this market has just immunized itself against the rising bond yields. But that immunization is only going to last until the market hits 3.0 in the US 10-year. That's the mark to watch for. When the market hits 3.0 in the US 10-year, and don't think that can't happen. Because look, just going back just a few weeks ago, we were at 2.4. Now we're at 2.7. We're halfway there to 3.0. When it hits 3.0 on the US 10-year, then you're going to have to watch these stock market, the effects on the stock market, because this immunization is going to wear off. There is a strong possibility that when that time comes and we get up to 3% on the US 10-year, that they're going to start to buy blue chip equities. There's a strong possibility of that. The blue chips will start to go more so than anything else, and money will come out of the bond market and into blue chips. There's that possibility. So anyway, thank you guys for listening. Like and subscribe, and we'll catch you in the next episode. Bye-bye for now.